Hey everyone, welcome back to Corporate Decoder, the place where we decipher corporate filings. Today we are diving into Bone Biologics Corporation's latest proxy statement, which sounds about as exciting as watching bone grow. But stick with me because buried in the details are plans for a reverse stock split, an executive pay proposal, and more, which could mean big changes for the company and its investors. Bone Biologics is holding its annual meeting on May 30, 2025, and they're asking shareholders to vote on several key proposals. These proposals include electing directors, giving an advisory vote on executive pay, and importantly, approving a reverse stock split. Let's talk about the reverse stock split. Bone Biologics wants the power to combine a bunch of existing shares into fewer bigger shares. Specifically, they're proposing a range where anywhere from 2.5 to 10 old shares become just one new share. The board gets to pick the exact ratio. Why do this? The main reason is to keep their stock listed on the Nasdaq capital market. Nasdaq has rules about the minimum price a stock can trade at, and Bone Biologics needs to boost its price to stay compliant. As we see, Bone Biologics got a letter from Nasdaq saying their stock price was too low. The company thinks that this reverse stock split might increase the price of their common stock and lower the chance of their stock being delisted. If the company is delisted, it can impact the price of the stock and make it harder to raise money. The board won't just blindly do this reverse split. The board will look at factors like trading price and volume, financial results, and general market conditions, and only split if those line up. The board says vote split, but there are risks. The price might not go up. It could make it harder to trade their stock. It can turn off investors, and the price can decline even more. They are doing this to comply with Nasdaq listing requirements and maintain a listing. Another proposal is about their equity incentive plan, which is how they want to add 30 million more shares to the plan, but this depends on whether the reverse stock split is approved. Currently, they have around 629,000 shares available, but they want to bump that up to over 30 million. If the reverse stock split happens, that number will be adjusted. Equity is a big part of how Bone Biologics attracts and keeps talented people. They say they've been careful with how they use it, but now they need more shares to keep offering these incentives. This plan allows them to grant different types of awards, like stock options and restricted stock to employees, directors, and consultants. There are limits on how much one person can get, especially for non-employee directors. The plan also lets them take back awards if they mess up and make adjustments if the company's stock changes. Also, there are some criteria on the grants. The limit of stock options that qualify as incentive stock options is limited. Again, the board recommends that shareholders approve this proposal as well. Next up, shareholders are asked to ratify the appointment of Weinberg & Company PA as their independent accounting firm for this year. The company paid Weinberg around $178,000 in fees in 2024, mostly for audit work. Looking closer, about $89,000 of that was for the basic audit of their financial statements, and another $89,000 was for other audit-related stuff. The board recommends voting in favor. Again, the board asks that shareholders approve the ratification of the public accounting firm. Finally, there is a proposal to adjourn the annual meeting if they don't have enough votes for the other proposals. The board wants you to vote for the board to adjourn the meeting if needed. The reason is the board needs to get all the votes that are needed. You guessed it, the board recommends that you vote in favor of the adjournment of the annual meeting if needed to get all the other proposals approved. Let's take a quick look at who owns the company. Jeffrey Freilich, the CEO, owns about 2.4% of the stock. Dina Walsh, the CFO, owns a little over 1%. The rest of the directors own very small percentages of the company. Digging in deeper, CEO Jeffrey Freilich's total compensation in 2024 was roughly $322, which was made up of a $300 to $300,000 base, a $30,000 in incentive pay. CFO Dana Walsh made $242,000. Keep in mind that the summary compensation table and the cap don't mean actual amounts of compensation. For fiscal year 2024, Bone Biologics had net losses of over $4 million, so more money to executives and less to shareholders. A $100 investment in 2021 would now be worth less than $1. The net losses and bad shareholder return makes the executive pay even more questionable. Finally, let's peek at how much the directors are getting paid. Bruce Stroever, the chairman, made about $81,000. The other independent directors made between $32,000 and $92,000, which included cash and the value of stock options. They get paid in cash and in stock options. Some members get an extra amount based on positions such as chair. Also, if the director is an independent and doesn't own too much of the company, they are qualified to receive this compensation. Now, what's my take on all of this? Bone Biologics finds itself in a tricky spot. They need to keep their stock price up to stay on Nasdaq, hence the reverse split proposal. But reverse splits can be risky. Whether they manage to turn things around and boost the stock price is a question we simply don't know the answer to. In the high compensation and low value to shareholders is also concerning, as management is making lots of money while shareholders are losing their investments. Thanks for tuning in. If you found this breakdown helpful, give us a like, drop a comment, and definitely subscribe for more corporate deep dives.